Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets? Well, they're trying to get to that record high, right? I mean, we're really close. I mean, we could hit the record high at any time, but here's the thing. We're right there, and they're going to push it up higher. They're going to push it up higher. I believe that. It's not just going to be touch the record high, but right now we're overbought, right? I mean, we've had a big run up, right? 20, 25, 30% off of the bottom, straight up almost, right? And we're right there pushing up towards the record high. I do think that's oversold. I think we're going to get a little bit of a pullback, probably come down to the 200-day moving average, and then we're going to break through that new record high and push it up higher. Now, it may touch the record high right here, right now, but I do think there'll be a little bit of a pullback when it does, and then they'll push it up higher and higher. Where do I see it going? Well, that's a tough question, right? I mean, you have to kind of watch the bond market to see when those start to collapse, but I think, where are we? 6,000 on the S&P. I think we can probably get up to 6,400, 6,500 on the S&P. They're going to push it up. They're going to add the liquidity. They're going to pump it up, get all the people in. And then the big rug pull. Big rug pull is coming. I think it's coming this year. Absolutely this year. Now, not yet, though. Not yet. They're still going to push it up higher. Now, today, let's talk a little bit about the real estate market. Everybody loves the real estate market, right? Well, here's the thing. Okay, the housing crash is starting to accelerate, right? Of course, not in your area. Your area only goes up, goes higher and higher, right? No one sells, nobody moves. It's a great area. People only buy in your area. No vacancies, no vacant houses. Here's the thing. There's 10% of houses, 1 out of every 10 houses in the United States is sitting vacant. How many is that? About 15 million vacant homes. 15 million vacant homes. There's no housing shortage. Yes, there's a shortage of affordable housing because everybody wants top dollar. But don't worry, housing crash is starting to accelerate. Now, existing home sales, record low. It's lowest it's ever been recorded. I mean, we just went through the prime selling season, right? Well, we're kind of at the tail end of it now. I mean, May, we're in June. Tail end of the selling season. It's a complete flop this year. I mean, the record low numbers. Now, Redfin comes out and they say that there's 500,000 more sellers than there are buyers. That's interesting. There's more people selling their home than there are buyers for the home. That could explain why the volume's really low. That 70% of agents didn't even sell one house last year. The market is just kind of coming to a standstill, right? Now, you got to be careful here because as it comes to a standstill, as the volume starts to drop, price always follows volume. It's going to follow it down, right? And people that bought in the last 3 years, 80% have buyer's remorse. They wish they never bought. They wish they never thought of buying. They bought the home. They're stuck now, right? They're trying to dump it onto the marketplace. They want to get out before the big crash comes, right? And the housing crash is just starting to accelerate. You see, what's happened now is sellers are going through a stage, right? They're motivated. They got their house on the market. They're motivated. They want to get that offer up here. But soon they go from motivated seller to a distressed seller. Now, why do they go from a motivated seller to a distressed seller? Well, because they can no longer pay their mortgage. Now, we see that in the FHA loan. The FHA loan is the new subprime. Back in 2008, we had the subprime crisis, right? I mean, they were giving loans to everybody. It was a great time. If you were breathing, I could get you a loan. Man, I got this 85-year-old man, a 30-year mortgage, right? Now, he didn't live that long, so the bank was upset with me when they took the house back. But hey, they gave him a 30-year mortgage, right? 85 years. I couldn't tell he wasn't going to live to be 115. I think he made it to 87. 2 years after he took out the mortgage, house has to come in and take it back. But they would give a loan to anybody. But you see, today, credit is starting to tighten up, right? But we do have our version of the subprime. Our version of the subprime today is the FHA loans. Now, why are they the new subprime? Because FHA loans only put 3% down, right? 3% down. FHA loans, since the housing collapse of 2008, have just been going off the chart. They've increased over 1,000%. Everybody wants to get in the FHA loans. They raise the numbers higher and higher. See, in my area, there's not a lot of FHA going on because our houses sell for too much money, and FHA loans only go up to like $930,000, and in my area, starter homes $2 million. So there's not a lot of FHA, but throughout the country, there's a lot of FHA, and FHA loans are now in default. 10 to 12% of these mortgages are not being paid upon. Now, here's why there's acceleration is happening in the housing market, the crash, right? Here's why the acceleration. You used to be able to go out and say, I can't make my mortgage. If you had the FHA loan, they could not foreclose on you, right? Biden signed that into office, his last day in office. He signed it into law, right? Saying you can't foreclose on the FHA guys till 2026. Well, what did Trump do? He reversed that, right? You see it back then. Oh, I can't make my payment. No problem. We'll give you a loan modification. You went from 30-year to 40-year to 50-year, whatever you could afford, right? They do a loan modification. No more. Loan modifications for FHA loans are going away. The Trump administration has changed that ruling, right? So they're going to start the foreclosure process. Now, here's the thing. You see, what's happening is the credit is tightening up. People cannot get HELOCs. You see, when house prices start to go like this and you have 3% down, right? What happens? Well, your equity goes away. You were underwater to start with, but now you're really underwater, and now you have to make the decision. Should I keep paying my mortgage? When I got the $1 million house, a $1 million mortgage on this house, right? I got a $1 million mortgage. I put 3% down, it's enough to cover the closing costs, $1 million house. But my next door neighbor just sold his for $800,000. I'm $200,000 underwater. Should I keep paying? That's a personal decision, right? You got to make that personal decision. You see, in the old days, that $1 million house would go up to $1.2 million, $1.4 million, $1.6 million, right? And you could go pull the money out. You could do a refinance. Well, right now the refinances are going away, right? Because you get locked in 2.8%. You don't want to refi because you'd be up here at the 7%. 2.8% up at 7%. You don't want to do a refi. So you're going to do a HELOC loan, right? Home equity line of credit to pull that equity out. Okay, that's a possibility, except for the banks are turning down over 40% of people that apply for the HELOC. Why? Because they don't have any credit left. The bank sees the writing on the wall. Now, in 2008, they'd refinance all these things and they were the bag holder, right? Banks don't want to be the bag holder this time. The banks are already in trouble. Now, we talk about this a lot on the channel, where the banks are already $600 billion underwater in unrealized losses. Now, this is fascinating to me. I feel a little bit sorry for the banks, but the banks, you see, it's not a problem that they're lost $600 billion of your money, of my money. Only if we come in and ask for our money back, they have to explain that they don't have our money, and then they have to have a fire sale on these assets, right? They have to have a fire sale to get rid of these assets at a lower price to get money back, but then the bank run comes and they get wiped out. You see, now you got the FDIC, they got 1% of the $15 trillion are on deposit, right? They don't have the money. They don't have the money to pay you. Now, granted, I think the government would bail them out, but now we've changed things though, right? We changed things in 2010. We put in the Dodd-Frank bill, right? Dodd-Frank bill says that the banks no longer need bailouts from the government, because they can just bail in your money that's already there. Because once you put your money into the bank, it is now their money. It is not your money. And they can give you back a credit slip saying you now own a percentage of the bank. Bank is insolvent, and they're giving you a credit slip saying you now have stock in the insolvent bank. But I want my money back. Well, you got this credit slip that says you own stock. Yeah, but that's not my money. But that's what the Dodd-Frank bill came in 2010. We had the financial crisis 2008. Well, they bailed them out in 2008, but in 2010 they go, Maybe we can just do a bail-in this time and steal the depositors' money. Is this time going to be bigger than 2008? People don't get that. Why is it going to be bigger, Tall Mike? Well, it's going to be bigger because the bubble's bigger, right? You blow the bubble bigger, the crash is going to be bigger. The bigger the bubble, the bigger the crash. It's just how it works. But here's the thing. Okay, this cracks me up. So the banks are underwater because they bought bonds, right? But the government, well, you got this new Secretary of Treasury. And don't get me wrong, I like the guy, Scott Bessent or whatever his name is. I like the guy, but he's got a problem, right? Just in the last half of this year, he's got to come up with someone to buy $9 trillion of our bonds because that's how many are coming for sale this year. Now, do you want to buy them? You got an extra $1 trillion laying around. You can probably get a pretty good deal from Mr. Bessent. But okay, so he needs a plan, and so I'll give him credit. He's come up with the plan. He wants the banks to buy these treasuries, $9 trillion with them, and he's telling the banks, don't worry, you don't need any assets on file. You don't need any collateral to buy these. So we're just going to pretty much just loan the bank the money so they can buy these from us. So somebody buys them. So it looks like somebody's buying them. So the banks will be holding the bag holder again, not in real estate. This time they're going to be the bag holder in the bond market, right? Now this is very fascinating to me. See, the old system's broken. Now what was the old system? Well, China, they would make all of the stuff for us, right? They would make all the goods and services. That was cool. So we would send China all of our dollars, right? We'd print the dollars. We'd send them to China. They'd send us the stuff, right? And what would they do with those dollars? They would come into the bond market and they would buy our bonds for us. And that was very cool. But that system's broken now with the tariffs, with us making enemies all around the world. We got a lot of enemies now. Don't have that many friends left. A lot of enemies. The tariffs are breaking that system, right? So we need to find someone else to buy the bonds. See, China is now a net seller of bonds, just like every central bank around the world. They're selling the bonds, which is causing the interest rates to go up higher and higher. So your mortgage rates are now 7%. I say they're going to get above 10%. A lot of people don't agree with that. Ramsey says go buy a house now. You can refinance when the rate comes down to 2% again. I don't think they're going that direction. I think they're going much higher. 10, 12, 14%. Why? Because nobody will buy our bonds. Look, we're paying 5% right now to get them to buy our bonds, and they're saying no. See, the federal government, they're really tricky. See, they're doing QE, but quantitative easing again. But they can't say that because that would really, well, the markets would get very upset if they were doing QE again. So I don't know what you call it when the Federal Reserve comes in and buys the bonds in the bond market. See, we tried to sell these bonds, but the bond market failed. They didn't have any buyers. No buyers at 5%. They would have to raise it to 6, to 7, to 8, maybe to 9%, just to get someone to buy our bonds. So the Federal Reserve goes, well, we can't have that, right? We can't have the bond market going up 8, 9%. So we had to come in and buy them. Now, in my opinion, that's quantitative easing again. They say, no, it's not. We just came in to buy bonds. Well, that's what quantitative easing is. But anyways, my point is that the interest rates are going to be going higher and higher because no one wants to buy our bonds, right? So quantitative easing is back. The Fed's going to be the only buyer of these bonds, but they've got the plan. Scott Bessent, he's got the plan. So let the banks buy the bonds with no money. Now, isn't that cool? Banks don't have any money. They already lost all of your money. They already lost all of my money. But the banks have no money now. They're going to be allowed to buy the bonds, but what they're not going to do is make mortgage loans. Why? Because they don't want your house back. They're already rejecting 40% of you that come in and want a HELOC. 41% are being rejected. They're saying no. But you see, you got the rates going higher. What's that going to do to your house? It's going to accelerate it to the downside. Accelerate, accelerate, accelerate. Now, of course not in your area. Your area is going to go up when the rates go from 7% to 8% to 9% to 10% to 12%. Your area, your house is going to go up. But every area other than your area, they're going to be coming down. They're going to be coming down really quickly. What's $1 million today? Might be 400,000 a year from now. We don't know how low they're going to go. But I'm telling you, when this happens, your equity's wiped out. Now, it's really good if you want to buy a house. If you're patient, if you wait, you're going to find some deals at half off. But if you're sitting there owning a house, counting your equity, hoping you can get a HELOC loan to spend your equity, well, your equity's wiped out. The banks are not going to give you a HELOC loan. So the banks, they're in a lot of trouble. But you see, we cannot have the rates go up, right? The reason we can't have the rates go up is because, well, the government is already bankrupt, right? But they got a printing press. They got a printing press. They can print, right? They can print all the money they want to pay the interest on these debts as they go up, 5% a month, 6%, 7%. Government can keep printing the money, but who it breaks is the private sector. The private sector, well, that's the businesses, right? 20% of businesses do not have the money to pay the interest on their loans. And when they have to refinance their loans are going from 4% to 8%. It just puts them out of business, right? Corporate bankruptcies are at a record high. They're at a record high. They're higher than they were in the great financial crisis. But this is all being papered over, right? With QE again. QE, Fed comes in and they buy the mortgages, buy the bonds, they buy everything. That's what the Federal Reserve is set to do. But when this thing goes, the rates on the long end are going higher. Yes, they're going to lower the short end to 0%, but the rates on the long end of the bond market, where your mortgages are going to be going higher, as mortgages go higher and higher, your house is going to go lower and lower. I call this the housing crash accelerator. This is just my take. You can go with Dave Ramsey if you want, but Tall Mike says house prices are coming down. You like this stuff? Give me the thumbs up. Punch that subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.